G'day everyone, Greg Canavan here. In today's conversation with Ryan Dintz, we're going to discuss in further detail one of the key recommendations we've made for our new money investor product this year. I hope you enjoy it.
Well, I suppose my question to you would be is do you think there will be countries looking to use gold as a way to shore up their currencies, or how do you see that playing out in 2022?
Yeah, I think from a sovereign nation perspective, we all know that nations own gold or they have gold reserves. Not all nations, mind you, but a lot of them do. It's just such an opaque system, right? We don't know that the ownership, and if there's ownership, we don't know whether that gold's been lent out. And that was something that we talked about when we first launched this service, is that, if you create a blockchain and a system of ownership, of genuine gold ownership, it will reduce potentially a lot of the double counting that happens in the gold market, and that could be very, very bullish for the gold price. I think just on gold, it's driven in similar ways that we were talking about before. When you've got the Fed looking to end taper and raise short-term rates, I think that dampen sentiment towards these sorts of assets. So gold has done really nothing for 10 years. So I'm not too concerned about the downside for gold with rising Fed rates. But I looked at some stats yesterday, and real long-term US rates are still deeply negative. And when I say deeply negative, I'm talking about 0.5%, which is probably not too far off the record lows that it has been in the last few years. So fundamentally, things are very bullish for gold, but I think sentiment in the short term it's just weighed down by the fact that, the Fed's going to start to taper its asset purchases, then it's going to start to raise interest rates. So you're looking at the short end of the yield curve rising, which is negative for gold, but the long end is staying flat, and that's bullish for gold. So fundamentally, I think it looks pretty strong here, and in in Aussie dollar terms, it looks quite strong. It's just a patience game. Like, I've been following gold pretty closely for 20 years, and it is a patience game. Sometimes it's it can be a really exciting ride. Other times, it's been in consolidation correction for the past 18 months. There's been various calls and expectations that it'll break out of that consolidation period. This year, it's tried a few times. It hasn't happened. I think 2022 probably will be the time it does. But it's just a matter of waiting. But it's just another good hedge, right? It's another hedge against what we see as this debt trap dynamics, disintegration of the traditional financial system. And for that reason, you have to be patient.
Yeah, I think, so we obviously recommended some gold along with that Bitcoin recommendation at the start of the service around about April. My problem with gold, and we get some subscribers asking to have this debate about gold and Bitcoin. My problem with gold is sort of twofold. And one is what you talked about, is that it's opaque. You don't really know who's holding how much and where it's at. So to use that as the basis of a money system, you'd need to have a lot more transparency around that. And I don't know if the participants are willing to do that.
Yep.
The second difference between the Bitcoin industry and, say, the gold industry is that gold miners, for example, when they mine gold, they sell it pretty quickly. I know some hold bullion, but they sell it for cash. They mine it, profit equals revenue minus costs. They try and generate cash from it. Whereas Bitcoin miners, a lot of the publicly listed ones, have publicly committed to holding their Bitcoin on balance sheet. So I don't know, it just shows a bit of confidence from one industry over the other industry that, we are at a much earlier stage of the price discovery process for Bitcoin, in that these Bitcoin miners, they're holding their Bitcoin on balance sheet, and capital markets are willing to lend them money at very cheap interest rates, or historically cheap interest rates, sub 4, sub 3%. So they can finance their operations with cheap debt and build up a bank of Bitcoin over time. And most of the public miners we follow are doing that strategy. So that's a slight difference, I suppose, between gold miners and Bitcoin miners.
I guess the difference is really about the economics, right? Gold miners can't afford to hold the bullion they mine on their balance sheet. They need to convert it for cash to pay for their fuel, to have their mines running, to pay for their labor forces, and anything left over. Obviously, shareholders say, can I have that in the form of, reinvesting back into further exploration so that they can maintain their reserves? So the economics at this gold price, the economics of gold mining are nowhere near as attractive as the economics of Bitcoin mining. The fact that you can mine your Bitcoin and not have to sell it just goes to show that it's pretty attractive. So you could argue that is an argument. It could argue that gold is just not as good a proposition as Bitcoin, or it could be that gold is very cheap relative to Bitcoin. So you could argue either way.
Yep. I suppose the next topic we should go on, which is sort of related to Bitcoin and gold, is the third option. So the third option for countries to get themselves out of the debt crisis they're in is the rise of central bank digital currencies. Because what they do potentially is give policymakers and bureaucrats more tools to deal with the economy. And you had a really good interview, I think, with Richard Turin, who wrote a book about it.
Yeah, that was a real eye opener. And I've got this book. Yeah, so I read this book prior to the interview, and that really opened my eyes as to whether it's revolutionary or evolutionary, this central bank digital currency business. And chances are it's going to come into China next year, and China is really leading the way on this. But I don't think it's necessarily going to be revolutionary. I think it's just another layer of this evolution in the digital finance world. And I actually think it will continue to put pressure on traditional banks, traditional payment systems, traditional finance. But I don't think it's necessarily going to be a change that we see happen in 1 or 2 years. I think it's going to be something that when China does it, the rest of the world will watch. I think it will allow their economy to transact at a much more efficient level. The banking system won't take so much of the it's almost like the banking system charges a fee for facilitating commerce and that sort of stuff. Whereas if you can conduct your commerce and payments through the digital channel, then it's with a lot less friction. So you're not paying as many fees and charges to the banking system. So I think a lot of countries will look at China's experiment and then not know what to do because their banking systems are so powerful that they won't want to bring about a policy that takes profit away from the banking system. So it's going to be a really fascinating couple of years to watch, but I don't think it's going to be as revolutionary as we perhaps think it will be.
Yeah, it's definitely coming. Like you said, China are going to do it first. I think Australia just announced last week that they're going to look into the idea of a digital currency. We're following every other country in the world, really.
Yep.
The thing I like to think about this is, though, it is coming, but it's not necessarily a threat to proper cryptocurrencies because they're two different things.
Absolutely.
You've got to think these central bank digital currencies would never have ever even have came into existence if it wasn't for the crypto industry providing the technology and the research to make these things possible. And you've always got to remember that's free markets driving these things. That's entrepreneurship and innovation. Left to its own devices, the banking system currently uses 1970s technology, COBOL programming, and they would be happy to do that, clip the tickets, make the money. Crypto is putting pressure on central banks to innovate, which I think is a good thing. And like you said, there are potential, real use cases in making payment networks like almost free, a lot faster, no 3-day settlements. Things should be settled in minutes or hours. And if you think about whenever you do a tap with your credit card or debit card, there's a 2.5%, 3% fee getting paid to someone. And if we're in a world of inflation, that's 2 to 3% just paid to banks that could just be cut out and potentially bring inflation down if that's passed on to consumers. So I think from that perspective, central banks doing payment networks to make that the case would be good. But is that the reason they're going to do it? Probably not. The reason they want to do it is to have more control over how money gets distributed through the economy, to have the ability to censor or stop transactions they don't like, to put time limits on people's spending. And it's really a financial socialism in a way. And to me, it's a dangerous thing because we think about the economic pickle we're in now. That is in a large part due to economic meddling by central planners and central bankers. And their solution happens to be, hey, give us more power. And I think
let's do more.
And I don't think that's the way. I think more and more people, and I think I get this, it's just a feeling, but I think there's a groundswell of opinion in the world at large. And maybe I'm in a crypto bubble, so maybe this is not representative, but I think people are seeing their freedoms impinged upon and they don't trust governments to protect them in ways that they might have in the past. And I think as more and more people understand what Bitcoin and crypto can do on that front, the more they will use those networks, even if they have the opportunity to use a government sanctioned network. I think the two systems will for a time operate in tangent, and eventually, I think the free market version will win, because that's the one that's always going to be innovating and creating opportunities and having businesses looking for ways to profit from it. Whereas the other network is going to purely rely on regulatory power, which is imposing to a degree. But in a digital world, in a free internet, eventually technology will win out, in my opinion.
Yeah, absolutely. And we could continue talking for another 45 minutes on that topic just alone, but we better keep going.
All right.
Thanks very much for listening. I hope you enjoyed that little snippet of New Money Investor. If you'd like to become a subscriber, please click on the link below. Thanks a lot.